Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Rob Farian. He's the CEO and founder of Flying V, our digital marketing partner. Rob, I know you're in California right now. How's everything there? Please tell me your home is not on fire and that everyone in your office is okay.
Everyone's okay where we're at, Gary. Appreciate it. Interesting times here in California. Interesting market that's starting to kind of come to a head here with the insurance and obviously the homeowners and construction and politics. So it's an interesting place to be this current place in time. But yeah, we're all safe. We're good. I know you've been traveling, Gary. It looks like you're in the same spot for another week. But what's the best thing so far that you've seen while traveling?
You know what, Rob? I had the nicest experience earlier this week. So right now I'm in Ho Chi Minh City, Vietnam, and the money here, they've got extra zeros. It's a little more than 25,000 Vietnamese dong per dollar. So, like you go to 7-Eleven, get a coffee and a yogurt, and you could be looking at like 150,000 dong. And a couple of times, yeah, I got confused on the zeros and I accidentally tried to overpay the cashier. And both times the cashier returned my money to me, which was really nice. Then earlier this week, I was walking down the stairs in the apartment I have here. I found cash sitting on the stairway, and I called the landlord and I said, I've got someone's cash. He told me whose it was. I returned it and then got a lunch invitation. So basically, everybody's returning lost money to everyone else and having lunch together. The funniest thing I had was I walked into a Vietnamese restaurant. I was the only non-Vietnamese person. Forget white. I was the only non-Vietnamese person in the room. The waiter brings me a menu in English where I had the opportunity to order leather jacket unicorn fish with bird's eyes and a chili sauce. I'm like, I'm so glad I have the English menu.
Very, very interesting. But sounds like Gary having a great time. And we've got a great episode of this week's Five Things, the dollar, gold, and crypto issue. We're calling it this week. We're talking Goldman, dollar, gold, a little bit of Stargate project, which was in the news, Netflix, and we will talk crypto there for our investor knowledge segment of the Five Things. Gary, ready to get right into it?
Let's go.
All right, Gary, thing number one, we're talking Goldman Sachs and their economic sweet spot as a misconception. Gary, you're asking, are more debt-funded government jobs really a sign of a strong economy? Thing number one, why Goldman's economic sweet spot is a misconception.
All right. So, Rob, this is actually part of a discussion and a debate I've been having for about 2 years. And I'm not picking on Goldman Sachs here. There are a lot of smart people in the finance community, a lot of strategists, market strategists, economists who keep talking about the great economy we have here in the US. And if you look at the aggregate numbers, meaning take it all together, the economy actually looks really good. We've had a lot of GDP growth. We have low unemployment. Even though the number of available jobs has come down, there are still more jobs available than there are people looking for jobs. And that people talk about disinflation, which is a reduction in the rate of inflation. And a lot of people are saying, hey, the US economy, as Goldman said, is in a sweet spot and we're in great shape. And all of that is true. And in my opinion, and this is something I've been saying for 2 years, hugely misleading. We think it's really important to break the numbers out and look at what's going on an individual level. Now, as a reminder, first of all, we think the CPI, the Consumer Price Index, is understated. If anybody really is experiencing a 2.5%, 3% inflation rate, or around a little under 3.5 for core, I'd be shocked. I think for most of us, we're experiencing inflation higher than that. Inflation is great if you're a banker, a hedge fund manager, a high income person with assets like a home and gold and a low interest rate mortgage, right? That's terrific. The issue is most people aren't in that position and inflation is crushing them. And we're seeing all kinds of stress from the consumer. consumers taking on more debt, interest rates are up for them. People are struggling. They are more people are defaulting on their auto loans, their credit card bills. We also think the employment numbers are very misleading. I've talked before about us being in a Potemkin economy, meaning it looks good, but there's nothing behind it. All of the job growth we've had, first of all, there's been no growth in full-time employment. There's been no growth in full-time employment for native-born workers. More people are working part-time jobs to make ends meet, and Goldman Sachs is saying we're in a sweet spot. No, if more people have to be taking on second jobs, that's not the sweet spot. That means a lot of people are struggling. In addition to that, the job growth has been in government jobs and jobs in healthcare. And I'm not saying healthcare isn't important, but it's largely funded by the government. Finally, GDP growth. 100% of GDP growth has come from increased government spending on consumption. That is the government equivalent of all of us going out, having parties based on credit card debt, and then saying, look how well we're living. Yeah, but the bill's going to come due. So I think what Goldman Sachs is saying is technically true, but highly misleading.
Gary, I think that's really the story here, right? Is the lack of context that we're seeing in these statistics. It really seems like it's just painting a real false picture of strength in the U.S. economy.
Yeah, Rob, that is definitely the truth. And one of the things that really bothers me out of Washington is they constantly talk about investing. Now, investing used to mean, in terms of government spending, that we were building things that would allow us to grow our GDP, our gross domestic product, for a long time. These are things like power generation, roads, railroad tracks, bridges, tunnels, airports, the kind of infrastructure that allows us to move things around, to trade with each other. We don't have that. We have a government overspending by $2 to $3 trillion a year, and most of that is going to expenditures. And the government is spending this money, and we're not funding it with taxes. We're not funding it, with anything that would make sense. We're funding it with inflation. And so what the government is doing is they're overspending. We end up with higher prices, and then they blame everybody but themselves. And none of this is an investment. It is simply spending, and it's being masked. And it's the reason why life is getting so hard for people. My guess is that a lot of the people listening to this have had their lives, their economic lives, their financial lives get more difficult over the last 3 to 4 years. And they wonder why. Why are things getting harder? And we look, fewer young people are able to buy homes. Fewer young people are getting married. Our birth rate is plummeting because young people aren't getting married. They don't have a home, and they don't feel like they can afford kids. They're spending a lot of money on pets, but a pet is generally much less expensive than a baby. All of these are signs that people don't feel economically secure. So having an economy where a small number of people are doing really well and averaging that with a large number of people struggling who can't afford homes and kids and don't feel secure, and saying, look, overall, we're doing great, I think it's hugely misleading. The government needs to spend less. Again, we've talked about this a lot, Rob, but I really hope DOGE, the new Department of Government Efficiency, is able to cut some of this wasteful spending. And I hope we see more people continuing to go back to work instead of staying on government assistance. It ends up being better for everybody, including the people doing that. Most people are happy when they're working and producing for themselves.
Yeah, we will keep tabs on that. We've been doing so for the last couple of years now, not only on this show, but prior DKI research pieces, articles on our website. Gary, moving to thing number 2, we're talking about the dollar and gold. And the question is, can they both be strong at the same time, Gary? So the dollar and the gold speaking here. Thing number 2, the dollar and gold defy traditional inverse trends. Tell us all how that might be the case, Gary.
So, Rob, first, let's give credit to Josh Reeves, new deep knowledge investing intern from the University of Tennessee. I thought he made a great observation, and he was the one who picked this particular piece. But really astute observation by Josh. The thing that he pointed out correctly is that the dollar and gold typically move inversely to each other. When the dollar is strong, gold tends to be weak. When the dollar is weak, the dollar price of gold goes up. And if you think about it, it makes sense, right? If the dollar loses purchasing power, then the value of an ounce of gold would be higher in dollars. The value is the same, but you'd need more dollars to produce that value. So they typically have an inverse relationship. What we're seeing right now is gold at near record prices and the dollar also trading very high. Now, when we talk about the dollar being high or strong, again, we've talked about this before. We're talking about the US dollar index. The ticker is DXY, and it's frequently referred to as Dixie. So Dixie, or the dollar index, is a comparison of the US dollar against the fiat currencies of our biggest trading partners. So the euro from the EU, the British pound, the Japanese yen. So when we look at that, the dollar has been strong and gold has been up. And so that's the question that Josh pointed out. He said, wait a minute, this doesn't make sense. How do we have Dixie up and gold down? Sorry, pardon me, and gold up. So both of them are strong at the same time, and that was his observation.
Gary, you've noted in the past that it seems that there is a situation where both things can be true. What does this do for your thoughts about gold, especially as it relates to the positions that you have within the DKI portfolio, and how this changes any perception you have, if any, on the dollar or gold?
So, Rob, there are a couple of things going on here. First of all, when we talk about two things being true, the dollar is strong if you're a foreign exchange trader. If you're buying euros or yen, the dollar has been very strong. If you're a US consumer and you want to do things like pay your rent, pay your mortgage, put gas in your car, buy groceries, we all know the inflation rate on groceries is not 1.5 or 2.5%. We're all paying a lot more for our groceries. In that situation, the dollar is weak. And so what's happening here is Congress is overspending and they're funding it with dollar creation and more debt. What that does is makes dollars less valuable. It's eroding our purchasing power. And so as consumers, the dollar is worth less and our prices are higher. Because of that, the price of gold in dollars has been higher. And so that makes sense. Now, what's happening in the foreign markets is the US Federal Reserve has been more hawkish than the central banks of other major countries, other major economies. Now, hawkish is just a fancy way of saying that means that the US Federal Reserve favors higher interest rates. The Bank of Japan, the Bank of England, the European Central Bank have been more dovish, just a fancy finance way of saying favoring lower interest rates. So when the US Federal Reserve has had higher interest rates, that has paid people more in other countries to own the dollar. And that's why the dollar has been stronger against other currencies. Now, the other thing that's happening is central banks, particularly in China and India, have been shoring up their gold reserves and they've been buying gold. So this is why we can see a weaker dollar as a consumer in the US, a higher dollar price of gold, and a stronger dollar versus the other fiat currencies. Basically, everyone, all of these currencies are losing ground. It's just other currencies like the euro and the pound and the yen are losing value. They're losing purchasing power faster than the dollar. So everyone's losing purchasing power. The other countries, other economies are losing purchasing power faster, and the price of gold is going up. And that's what Josh pointed out, and I think he's right.
Great work, Josh, there on thing number 2. This is the 5 things that you're watching the dollar, gold, and crypto issue. If you have any questions, please leave the questions in the comments. Give us a thumbs up, thumbs down, depending on how you think we're doing. We love any and all feedback. And also, any sharing, subscribing would be great for future episodes to keep tabs on what we're saying and be able to come back and tell us when we're wrong. Be sure to head to our website, deepknowledgeinvesting.com. Sign up for a free subscription to our newsletter. as well as consider a premium subscription packed with tons of value, current portfolio, when we close positions, open new ones, and plenty of gated content for premium subscribers. Moving on, in this week's version, thing number 3, Gary, you've heard about the Stargate project coming out of the Trump administration. We're talking a question: do the participants here have the funding for thing number 3, Gary? Stargate project, a $500 billion investment into U.S. AI infrastructure. Definitely put the market on notice, and curious to get your 2 cents here.
Well, so Rob, the question you are asking is, do the participants in the newly announced Stargate project, it's this, as you said, $500 billion investment into AI infrastructure. And your question is, do they have the funding? And that was the question last week. Over the last 48 hours, the question may be, does it even matter anymore? So I hate to kill our own story here, but we typically write the 5 things on Thursday and Friday, and then I'll review it early Saturday morning. We put it to bed and start to get everything published over the weekend. Obviously, Rob, with a lot of help from your team at Flying V, which we really appreciate. So, but over the weekend, there were a lot of events, or rather one big one. So last week, President Trump announced this big plan, and he collaborated with Oracle and SoftBank, ARM, Microsoft, NVIDIA, OpenAI. And the idea is that the United States has had a gigantic lead in artificial intelligence. President Trump wants to make sure we maintain that. And so, they began this initiative with 10 data centers in Texas, plans to expand into surrounding states. They're going to create an estimated 100,000 jobs, new AI research hubs, workforce prep, partnerships, and all of this sounded really interesting and really exciting. And I do think, the United States should try to maintain some sort of edge in artificial intelligence. And then, 2 things happened. First of all, Elon Musk came out and said, wait a minute, the people at OpenAI or at SoftBank, they don't have the money they're saying they do. Where's this 500 billion coming from? And then, Rob, as we saw over the weekend and in yesterday's market carnage, or sorry, the market carnage from earlier today, rather. I'm in Vietnam, 12 hours ahead. It's Tuesday here.
We're all over the place now.
Yeah, exactly. Yeah, as we film this, Rob, you and I are 15 hours apart. I think It's Monday there, Tuesday here. But over the weekend, we got the big DeepSeek announcement. This Chinese AI developer that already, this wasn't an announcement, this was a product release. And this new DeepSeek product is one performing as well or better than the US-based AI models on regular tests. People who use these things are saying, yeah, it's pretty good, it works, and they're getting generally good responses from it. But what they're claiming is that they were able to do this on NVIDIA's lower end chips, not NVIDIA's best chips. They supposedly did it on about $40 to $50 million of hardware compared to the tens of billions of dollars that have been spent by the US hyperscalers. And they claim that they only spent $6 million training the model, where in the US, our companies have spent a multiple of that. Now, I don't believe the Chinese numbers. I think, maybe DeepSeek spent, as one very smart Deep Knowledge Investing subscriber emailed me yesterday, maybe DeepSeek spent $6 million, but they probably got subsidies from the Chinese government. But I think there's no question that whether they spent $6 million or $60 million or, $600 million, whatever the number is, they've clearly been much more efficient. They spent less. They worked with less. I think China has had access to more and better NVIDIA chips than a lot of people think. It's been an open secret in the business that even though the previous White House banned export of NVIDIA's best chips to China, all China did was they were able to go online and rent time on NVIDIA's best chips. Right? It's very hard to gate the internet. So I think DeepSeek has had access to more than what they claim, but there's no question it is more efficient, and they did manage to do more with less. And so, the real question is, you were asking the question, does the US have $500 billion of funding for Stargate? The real question is, should anybody be spending $500 billion?
Gary, in terms of DKI, and obviously in the past we've talked about energy investments as it relates to AI. What does that look like for DKI portfolio positions, and any thoughts on that as it relates to the ties that AI has to energy plays?
So, Rob, the overall portfolio is in great shape. One of the things that we've talked about is we are heavily, heavily hedged. So, obviously, everybody's stocks were down earlier today on Monday. That'll happen in a huge market sell-off, but we have gigantic hedges in place. I'm short market indexes. I own puts on the indexes, and so those it made a lot more money than the market declined yesterday, particularly the options. So we were really well protected for that. We also own companies that reduce healthcare costs for people who are ill and need medical treatment. We own companies like Biometric Security. These are not positions that are affected by DeepSeek or AI related efficiency. Where it's going to be very interesting is obviously the power generation companies. And, we do own power generation, and we do own things like uranium. Those stocks did badly yesterday, understandably. Now, the question is, does DeepSeek's announcement mean that nobody's going to need more energy? We don't need more energy infrastructure. I'm skeptical on that. We're doing more work on it right now. But just remember that in the US, people want to electrify everything. People want electric cars. Whether we need a small number of new AI related data plants or a large number, it's still infrastructure that needs to be built. And we're very positive on the nuclear energy thesis. Those plants are planned, permitted, and built and operated over a 50-year time scale. I don't know that DeepSeek finding a more efficient way to train an AI model means that the next half century, of energy usage in the world is going to change that much. I would also point out that one of the things that we have in the US, because we have the largest and generally strongest stock markets in the world, we're very US focused in our thinking, but there are billions of people all over the world who live on very low income. You see this, billions of people living on $2 a day or $20 a day, whatever it is, it's a very small number. And those people want a higher material quality of life. And that means more energy. And so, right now, Africa and lots of India and China and even Germany, they're burning wood, they're burning coal. They're going to want to switch to cleaner forms of energy. We think that's going to be nuclear. So, look, it wasn't a surprise that some of these stocks performed very poorly earlier today. I don't know that, DeepSeek has changed the landscape for the next 50 years. And I'm just going to add one quick thing here. A lot of people, Rob, are saying, hey, wait a minute, DeepSeek is more efficient. That means we don't need more energy. But that's not the way technology works. As technology becomes more efficient and cheaper, what happens to the demand?
Yeah.
People want more of it. They want to use more of it. And, Rob, think about this. When you and I were kids, a home computer might have been expensive. When I was a kid, people used mainframes in their offices. And so now, like I personally, I have a computer, I have a laptop, I have a tablet, I have a cell phone. I'm guessing you are similarly equipped. You probably have computers at home. You have a laptop, you have a computer in the office, you have a cell phone, you might have a tablet. You have all these devices. The reason you have all of that is because prices have come down. So as the price of accessing using AI comes down, that doesn't mean we're going to use less of it. People will use more of it as the price comes down. So I think today, still, in the wrong time zone. I think today's market action may have been a little bit overdone.
Interesting stuff there, Gary. And yeah, I would agree. Be interesting to see what happens. We'll keep tabs on that as well, especially as it relates to the DKI portfolio. Gary, thing number 4, we're talking about Netflix. Been a while since we've seen this name in the headlines, so that's kind of fun here. We're talking about U.S. audience, their willingness to pay more, international audiences jumping on board, which all leads us to thing number 4. Gary, Netflix, ticker NFLX, smashes earnings while raising prices, sending its stock soaring. Gary, catch us up to speed on what is happening with Netflix.
All right, Rob. Well, first, to get up to speed, we need a little history. Back in 2012, Raji Kabaz and I were running Silver Arrow, and we saw that every big hedge fund on Wall Street owned Viacom and CBS. They owned ABC and Disney, which owned, they owned Disney, which owned ABC and ESPN. And, they were very positive on what used to be called traditional TV, linear TV. And I took a look at this. Raji and I looked at this and we said, wait a minute, this is completely crazy. This model is going to be disrupted and blown up by things like streaming television, Netflix, YouTube, piracy, commercial avoidance. We correctly in 2012 saw the streaming revolution coming, and Netflix was a big part of that. And so, we wrote a 50-page white paper called TV is Next, where we correctly predicted the implosion of the linear television model. Now, Netflix was growing like crazy at the time. They were shifting from their DVD model to their streaming model, which is all that anybody knows right now. And they grew and grew and grew, and people said, oh no, Netflix is going to run out of subscribers in the US. So what did Netflix do? They started getting international subscribers. And then, growth started to stall, and people said, oh no, Netflix isn't going to be able to charge more. That wasn't true either. What Netflix did was they said, hey, we're going to take your existing plan. Now you have commercials. If you want to, to avoid the commercials, you have to pay us more. And then people said, oh no, everybody is sharing their Netflix password. And Netflix said, yeah, we're putting a stop to that. If you want more people on your plan, you have to pay us more. And people said, oh no, there's no growth. And Netflix said, yeah, we're raising prices. And every time they've been able to do it. Well, guess what, Rob? They did it again. They now have over 302 million customers worldwide. Fourth quarter revenue was up 16%. Earnings per share doubled from the year before. It went from 211 to 427. This is enormous. So what did Netflix do? They're increasing pricing again. Standard plan's up by $1.50. The ad-supported plan is up by $1. The premium plan is up another $2 a month, $24 a year. I'm sure there are going to be people saying, oh no, now people are going to cancel their subscriptions. Rob, do you really think 302 million people are going to cancel their subscriptions because they have to pay another $1 a month more?
Yeah, no way. No way. Going to be interesting. And Gary, we've also seen on the YouTube side, YouTube TV, with Alphabet and ticker Goog, Goog. Between them and Netflix, Gary, curious which business you might prefer to own. And I'm sure you referenced to kind of what you're talking about with Raji and what you guys saw about 12 years ago with that article, TV is Next.
Well, Rob, first of all, at Alphabet, which is really just Google in disguise. By the way, I still think it's ridiculous that Google changed their name to Alphabet. Facebook is now Meta. Like, this is, you say Alphabet and people still don't know what you're talking about. You say Google. Oh yeah, I know Google, right? So they bought YouTube, I don't remember, something like, a dozen or so years ago, 15 years ago, for like $1 billion. It was some crazy number. It's worth an absolute fortune. And the comparison that I was making is right now. And let me ask you this question. Would you rather own the streaming companies like Netflix or Google's YouTube, or would you rather own, CBS and ABC and ESPN and the traditional cable bundle? What would you want to own today?
Yeah, it's an absolute no-brainer, especially because, and again, my seat, I think, different perspective, right? But you think about what you're logged into day-to-day basis, right? Especially when it comes to YouTube TV. And now you're watching YouTube TV, which is your what formerly was cable, right? And the ads that are being served to you are directly correlated with browser information, right? Previous browsing history, etc. So, yeah, the value of the advertising, which has always been linear TV, like you talked about, TV is next, right? Has been the bread and butter. So, yeah, Google and Netflix are sitting in pretty good shape. And I'd take Google over Netflix if I had to actually answer that question.
Yeah, and think about how much things have changed, Rob. Even now, like if you want to watch regular TV, you have to be in front of your television, and yeah, you can use your tablet, but it's a clunky interface. You got to log in, and they've got programming on a schedule. Now, like deep knowledge investing, we're not the only finance channel out here. But people can post content that can be accessed anywhere, and even simple things like, when I'm working in the garage or trying to, work on my lawnmower or my snowblower, stuff like that. Sometimes I come across a problem I don't know how to solve. I sit in the garage. I've got my tablet there. I just go to YouTube and I type in, Toro something or other, lawnmower, carburetor replacement, carburetor repair, videos pop up. I don't even
Yeah.
have to go inside or like access expert. It's just right there. And it's just a great way to learn.
Great stuff, Gary. And this is the dollar, gold, and crypto issue of the five things. We're moving on to our fifth thing, which we get into a little bit of investor education. This week, we're actually talking about crypto with thing number five. You've got everybody hodl on or hodl on or however we're pronouncing it, as you mentioned, Gary. But thing number five, we're talking crypto volatility. Presidential silence causes price fluctuations.
All right, Rob, let's break this into two segments. Let's first talk about the volatility, and then we can talk about crypto versus Bitcoin. How's that sound?
Perfect.
All right. So, President Trump, as a candidate, was heavily supported by people in the crypto and Bitcoin industry. And he was very smart. He went out and solicited their votes, and he told them, you know, donate to my campaign, vote for me, put me in office, and I will put a more crypto-friendly administration in at the SEC and the regulatory agencies. And guess what? He actually is following through on that. However, a week ago during his inauguration, we had enormous amounts of volatility. So just ahead of his inaugural speech, Bitcoin went, straight up to 109,000, the all-time record. That's in dollars, of course. And then, just before the speech, as drafts of the speech started to come out, Bitcoin started to slip, crypto started to slip. People saw that that President Trump had released, a couple of meme coins that caused Bitcoin to slip. And then during the speech, Bitcoin actually dipped down to the 100,000 level from this all-time high of 109,000, simply because he didn't talk about it during the speech.
And Gary, in terms of talking about cryptocurrency and Bitcoin, how anxious should investors be, right, with President Trump? How much movement do you think that'll give them one way or the other? What's your take? How should people be thinking about this president and what it means for Bitcoin investors?
Well, first of all, and it's a very short history here, but there's no question President Trump is and will be the most Bitcoin and crypto friendly president we've ever had. Now, if somebody wants to point out we've only had a few presidential administrations. Yeah, it's true, but I think he's very pro Bitcoin. My thesis on Bitcoin is really simple. Governments all over the world, led by the United States Congress, are overspending. They are debasing their fiat currencies. That's just a fancy way of saying they are printing so much money that the value of that money goes down. We experience that as inflation. And so the world needs sound money. It's good for everything to have money where the supply doesn't expand at an exponentially increasing rate. Bitcoin is actually deflationary. Bitcoin's issuance schedule decreases over time. And as of its last halving, almost a year ago, Bitcoin is harder than gold, which means it's being issued at a rate slower than new gold is being mined. So that is a long-term thesis. That's the kind of thing that plays out over decades or even centuries. The idea that people would be selling Bitcoin because President Trump didn't mention it during a 20 or 30-minute speech on a particular Monday, I think is ridiculous. Now, I do believe that the Trump administration will follow through on their promises and will be crypto friendly and Bitcoin friendly. But even if they're not, Congress is going to overspend. And whether President Trump follows through or not, whether this is a crypto friendly administration or not, hold your Bitcoin. The problems that have caused Bitcoin to rise from almost nothing to, as we talk about this right now, about 102,000, which is where it is as we film this, those problems still exist. The world still needs sound money. Whether any particular politician or government supports it, that's the direction we want to be invested in. So I wasn't really worried about the speech. I think the market overreacted to a non-mention in a 20, 30-minute speech.
Great stuff there, Gary, as well as I think next week we'll be talking a little bit about new cryptocurrency banking legislation. So stay tuned for next week's version of the 5 things. And that concludes this week's version, the dollar, gold, and crypto issue. The 5 things to know in investing this week. Again, be sure to head to deepknowledgeinvesting.com. Sign up for a free subscription to be notified of all new content being posted to the website. Also, definitely take a look at the premium subscription to get full access to all gated content material and become a premium member and part of the DKI community. We'll be here, same place, same time next week. Send your questions into ir@deepknowledgeinvesting.com. Gary can get back to you if he likes your question, and if not, we'll stow it away for some other segment later on down the road. Gary, final thoughts for this week's version.
Yeah, Rob, it's been a fascinating and volatile week. This is one of those few situations where, we put the 5 things to bed on a Saturday morning, and by Monday, everything has changed.
Yeah.
But, that's part of investing in the stock market. And, the reason that even here in Vietnam, right, I'm staying up late to be on top of these things. And I have calls scheduled for tomorrow already to discuss a lot of this stuff. Separately from that, Rob, thanks. I know it's late there in California. Always appreciate being able to film this with you. Round of applause for DKI intern Josh Reeves, huge contributor already to this week's version of the 5 things, suggesting some great topics, providing high quality analysis, great work ethic out of that young man. I also want to thank our viewers here. For those of you who have liked and subscribed and sent in questions, and interacted, and some of you have added some things in the comments saying, hey, like your opinion on this, but I would add this, or I think you're wrong, this is why. Love getting that interaction. Really appreciate hearing from you, our viewers. So we know your time is valuable. Thanks so much for spending with us. We will look forward to seeing you next week with a new version of the 5 things. Thanks so much.
Thanks, everyone.